Well guys, I got some bad news unfortunately. There are a lot of stocks out there that are just terrible to own, and unfortunately they tend to be retail favorites. And if you started investing in 2020 or 2021, the idea of a company going bankrupt seems kind of impossible, or it rarely happens, but unfortunately the truth is very much different than that. This is usually one of the most controversial videos that I do, I know guys, I know, but we absolutely have to discuss some stocks that may go bankrupt if you're not careful. And some of them honestly are just going bankrupt. It's just going to happen. So let's kind of discuss all that here today, right after you gently tap that like button and, make sure you're subscribed too, guys, if you like the truth without the hype. And make sure you check out the pinned comment down there for the sale on my group that's going to end this weekend. If you want to avoid stocks like this and be able to have a discussion, learn how to do evaluation, and be able to actually talk with me and all of other 6 and 7 figure investors about which stocks to buy, what the valuation is, how to get that valuation and everything else, just make sure you check out the pinned comment down there and take advantage of the sale. Now, to be clear and upfront, I'm not poking fun at anybody that owns these stocks or considered owning these stocks. I'm not knocking anybody at all. I'm not trying to talk negative about anybody here. I totally understand where a lot of folks came from. A lot of folks, you got caught up. I mean, YouTubers, we're just as guilty as, pumping you guys up, pumping up these stocks as anybody else out there. And unfortunately, got a lot of you guys caught in a lot of bad positions with a lot of bad habits. And just quite honestly, some things that just aren't true in a normal stock market, much less a down market like we're in right now. A lot of those habits are there, because of a lot of the interaction that happened over the past 2 or 3 years. And I know a lot of that is not directly your fault. I understand that completely. I'm sympathetic to it. And I'm absolutely not knocking everybody or anybody who caught themselves in that scenario or who happened to pick some of these stocks or have some bad stock picks that are out there. We all have stock picks like that. I've had tons of losers. Warren Buffett's had losers. Every single investor has losers. And if they're on YouTube telling you they don't have any losers, they're lying to you, or they haven't been investing for very long at all, or they're probably still lying to you guys. It's just, those are facts. Everybody has losing stock picks. It's not about picking 100% great stocks all the time. It's about picking a lot more winners than losers, but you're going to have losers. And unfortunately, the stocks we're going to discuss today fall into that losing category, in my opinion, of course. So stock number one would be any banking stock that kind of gets on that list of potentially failing and it really starts to crater, 20, 30, 40% a day, whatever the case is. One of those stocks like that, I saw a lot of folks suddenly trying to play those stocks as they played. Now I get it. Some stocks absolutely made it, like PacWest, which just had a huge run afterwards and went straight up. I mean, it was basically beaten down. It was the next one to go under, and then it looks like they may survive. I mean, who knows? I'm not really following the story that closely in regards to what the latest news is today, but it had a huge run, right after it had the huge beat down. And a lot of folks got caught in that same exact scenario with First Republic. I know we had members in my group that absolutely decided to take a flyer on it. Now, I believe they just took a small flyer on it. It was kind of money they were willing to lose. But the point is, there's a lot of other folks out there, and I've seen some videos of people saying, these are good plays. Just wait for one to get beat down, then you buy it, and it'll rocket. I don't know. It's trading one, and it's more speculation. It's not actually investing. So to me, you're playing a very dangerous bank game with the banks, especially banks that are struggling or kind of targeted or could be failing, have bad management, have bad assets, have all the negatives that you don't want to see in a bank in the first place, and then trying to make a trade-off of it typically doesn't work out your way. We talked about it in a prior video. I think there's going to be several more bank failures to go. So it's not like, oh, it's all done and the Fed's just going to save everyone. Guess what? They didn't save everyone. Now they may save, depositors and, other loans, and they're going to sell off the loans and some of the other assets that are involved underneath those banks. I absolutely agree there, but they're not going to save the shareholders, in regards to those folks that own the stock of the bank. They're not going to get saved. Sure, they may save the executives. I agree. That's not right. There should be other things that happen to them. I agree. That's a whole different discussion for a whole different day. But shareholders are not going to get saved. So you have to understand when you're making those plays, you are simply speculating. You have no inside information. None of us have any idea as to what's really going on underneath the hood there until it actually all kind of unravels. And basically you're going to hear it. It's going to happen over the weekend, because that's just the way that regulators come in and take over. They come in and take over on a Friday, so that way they can sort it out through the weekend, and then by Monday there's a buyer there to take over that bank. So in the meantime, if you own shares, you're probably not going to get made whole in regards to your investment in that stock. So for me, I would stay completely away from those. You're simply speculating, and it's just not worth it at this stage. So stock number two would be Carvana. And again, we had the greatest bull run in the price of used cars in the history of the US. and Carvana needed to take on debt in order to survive, in order to keep going. So, kind of logically thinking through this here, I don't know what turnaround plan you could have to where when the greatest bull run in the history of used car market happens and you can't make money. That's a problem. That means it's a bad business model, bad management, probably bad all the way around. So for me, I would stay completely away from a stock like Carvana. I don't see any way that they can make this work if you can't make it work during the greatest bull run of all time. And on top of that, now you're more debt laden. And hey, guess what? New cars are starting to compete on price in new cars, which is going to further drive down the price of used cars, which of course hurts their margins even more. So this is just one I would stay as far away from as possible. I understand a lot of folks, again, there's the bankruptcy play that's out there because of the whole Hertz thing and all that other garbage that went down during that time frame. You've got to kind of happen and kind of get everything from 2020 and 2021 kind of just completely out of your head, because that's not normal. Those type stocks do not get saved in a normal stock market. That was the product of that incredible bull run and the very, very tippy tail of that bull run where we were into the pure speculation stage. And that's a once in a decade, once in an every 15-year event. And I don't think we're going to see that again. So I don't see anything that's going to come along and save Carvana from the mess that they've created, that they're now just going to basically have like a nice slow death as it moves on. All right, so now we're kind of into the juicy, controversial part of the list here, guys, and it gets progressively more controversial as we go on here. So let's have a little bit of fun here. Again, remember, I'm not judging anyone or anything else, and you may have a different opinion than me, and that's okay. But these are stocks that I absolutely think are, they're not good stocks to pick at all, but they are very much heavy retail favorites, and so we got to talk about them. So stock number 3 would be Lucid, and here, I'll just give you an example here that I just recently read. Somebody posted in my group. Lucid is essentially, or was essentially, at a Tesla supercharger network trying to get Tesla owners to sign up for a free test drive and a Lucid, and apparently nobody took them up on it, guys. That shows you where their demand's at. You're not seeing Tesla do things like that. You're not seeing other car companies having to do that in order to move cars, but you are seeing Lucid having to do that to try to move cars. I haven't looked at their latest financials. However, their past few quarters have not been good at all. They've been very disappointing. And guess what? No matter how good their backing is, and I agree they have great backing, that backing does eventually end at some point in time. The Saudis have obviously pulled investments in the recent past here. So it is possible that does eventually get pulled. So that's one huge negative against them. And second, no amount of backing can help you scale a business. And obviously, as Elon said, trying to scale these type companies is hard. That's the hardest part. It's not creating a great product. It's not getting it on the road. It's scaling it is the hardest part. And they're taking their lumps right now. You can throw as much money as you want, but if you can't execute with that money definitely helps. But if you can't execute with that money, it doesn't matter. And right now they're at the hardest part and they're having a hard time scaling. And oh, by the way, we're going into some sort of a slowdown in the economy. Definitely not the euphoric economy we were in 2 years ago. So, kind of when you look at this, you're kind of like, they sell premium vehicles at a very high price tag. They're having problems scaling, and we're coming into a down economy. That to me is just not a good, situation to be in at all. That means a lot of cash burn, which means their investors are going to have to bring in a lot more cash to keep them afloat, to help them get through kind of the, those initial production stages that are so hard and so difficult that, do they have the talent, A, to pull it off, and B, do their backers have the appetite to have a prolonged, protracted, basically wait through not only a downturn in the economy, and I don't think it's going to be bad. We talked about that here in the group, or right here on our YouTube channel before. I don't think it's going to be bad. However, that doesn't mean it's not going to be difficult, and it's not going to be in that boom time period. That could take 2 or 3 years for everything to get there. And does that, backing group have the appetite to hang on for that long, to continue to pour billions into the business in order to get it out on that other side? And then on top of that, does anything else come into play? Or is there an appetite for that type of EV on the back end of this? I don't know. Nobody knows the answer to that question. It's a very speculative stock. I thought that from the start. When it was at $40, I was saying stay away. When it was at $20, I was saying stay away. And I got just destroyed in the comments section for saying that. Everybody was beating me up for it because it was surely going to be the next Tesla, and it was going to, I think it went all at $80 or something. I'm not real sure. Anyways, I just took a beating the whole time, and it just made no sense to me. I had no idea how it went from 40 to 80. I just knew we were in a euphoric market, and it made no sense, and I had no desire to speculate on a stock like that. And I knew long term there was no way it was maintaining that price at all. So very, very glad we were able to stay away from that stock. But I know there's a lot of folks that hang on to hope that it may very well turn around, and it might very well. But I would expect that to be over a period of years, not over, the short term. And that's assuming a lot of things fall into place. And those are some big assumptions that for me personally, I just don't feel like investing based upon some assumptions that may or may not. I understand we all make assumptions, but those are very big what ifs. Those are not, hey, they're going to get there. It's just going to take a little bit of time, or they're on their way there. Right now, they're not on their way there. And that for me makes me hesitant to put any money towards that stock at all. So for me, Lucid is definitely a no-go, and I would stay away from it for me personally. So stock number 4 would be Bed Bath & Beyond, and I'm just using it as an example. Any other bankruptcy play out there is just, to me, just a non-starter. I don't see any reason in it. I don't understand the strategy behind it. Going after bankrupt stocks, it worked one time with Hertz, and it just hasn't worked since then. You were just messing around with traders while they're waiting for everything to kind of be taken apart and kind of pieced together. And it's just something you don't want to be a part of. I don't understand the game. It's something that it worked once, maybe twice. It doesn't work normally. So you're playing a losing game that's weighted against you. And there's just better trades. I'm not a trader. You guys know that. A lot of you guys are long-term investors like me. And if you're going to trade, you need to have a better strategy than just buy bankrupt companies and hope that they go up. That's not a good strategy. There are day trading strategies that work. There are swing trading strategies that work. There are option strategies that work. There's all kinds of strategies to make those types of trades. But just betting on every stock that went bankrupt and it happened to have had a previous run with Wall Street bets is just not a good strategy, or not one that I would implement at all. So for me, I'm staying away from stocks like Bed Bath & Beyond or any other stock that goes bankrupt or is on the bankrupt block, or whatever the case is. I would stay completely away. And on to the final one here. And I know I'm not picking on, the meme stocks or anything else like that, but I continue to get messages and DMs and emails and everything else about these same stocks, about what's the play here, what should I do, what's going to happen with these. And so I got to call them out whenever I see them, and I've got to be upfront with you guys in regards to my opinion on these. So the final stock would be AMC stock. And I know, I'm ready to take my beating down in the comments right now. Now, I personally think when it got down around $3 in the threes or so, it was getting closer, right around fair value, if you kind of wanted to tell me that. But folks are not buying AMC to try to buy it at fair value and hold it, hope that it grows over time. People are buying it based upon that hype run, that it's going to get another hype run up to 60 or 80, and obviously hoping for that 100,000, which I hope everybody now understands is physically impossible. There's not enough money in the world. The Fed couldn't print enough money to pay off that debt. It's not going to happen. Those sorts of narratives just need to go away with these type stocks. They're never going to pay out. There's ways out of it. There's one, I'm not even sure the numbers being used are even real or realistic or anything else. And I know everybody points to something else. Hey, great. But in terms of, to me, there's a difference between showing what can happen, or maybe what is out there, or maybe what, is actually physically out there, and people actually having to pay the bill. It's just not going to happen. You don't have to pay the bill. I can guarantee you the shorts have been covering during this downtime. And more importantly, if they can't cover, they're just going to file bankruptcy. They're not going to pay the bill. So regardless of whether it's right, wrong, we can debate that. And I agree there's a discussion there to be had that would, maybe incur a fairness piece to it. But that is the reality. And I like to invest based upon reality. I don't care about what's fair or not fair, or this law should be this or that law should be that. I have to deal in the reality right now today, whether I like it or not, whether I agree or not. I have to deal in reality. And the reality is that short squeeze. It may happen. It may go up, I don't know, $8, $10, $15. Who freaking knows? Craziness happens. Sometimes I honestly think it's just Wall Street just screwing with us and getting us all hyped up, and then they're going to turn right around and dump it again. I would not be surprised at all if there's hedge funds out there doing that exact thing and trying to induce that exact behavior out of us, so then it catches the hype train. People pile in because now, great, the great squeeze is coming, and then they dump it and they absolutely crush your soul. And then now we're all stuck talking about how it's manipulated and the SEC is useless and everybody else is useless. And it's just like, it's a bad premise to begin with from the start. Even if you could make everybody play by the rules, they're just going to file bankruptcy. They're not paying it out. So for me, this is a stock that I've stayed away from the start. I'm not saying there's not a trade there, but it's just not something I want to play around with. And remember, the sale ends this weekend for my group, so make sure you check out the pinned comment down there and see everything that you get. You get my buy and sell alerts in real time, and I can guarantee none of these stocks will be on it. You get to see, take 5 courses for free. You get to talk with me, slide into my DMs, jump on our live Q&As. We got tons of exclusive videos. Just check out the pinned comment down there and see everything that you get with it. And click this video here if you want to see the exact stocks I'm buying right now, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.